Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into what's impacting mortgage rates on any given day. Sometimes it could come from economic calendar or a combination of that with headline news or geopolitical. Sometimes the market sentiment even changes, so where good news is now bad news and vice versa. And for somebody who may be watching the market may not understand what's going on here. And we've been getting a lot of those lately. A little bit about myself is my name is Mike again, and I do work with a national lender. We do loans in all 50 states. We'd like to be able to help you if you have any questions regards to as a resource, be a resource for you folks. If you guys got any questions, we're here to answer any questions. We'd like to help you with any refinance or purchase leads as well. So please feel free to reach out anytime. We'd love to be able to help you out. Meanwhile, why don't we just jump right into our economic calendar? We'll start with the jobless claims. So last week we advised slightly higher at from 214,000 to 215,000. Forecast is supposed to be a slight dip to 212,000, and it came in much lower at 187. So that's a very good number. That's the first time I think we've seen under 200,000. So very good news right there. Continuing claims, we're seeing shrink from 1.417 million down to 1.35. So that's a good news right there. We also got durable goods for the month of February. So durable goods went from 1.6 in percent in month over month in January. However, forecast for February was supposed to drop a 0.5%, and it dropped much further to 2.2%. So obviously not very good news right there on capital goods. But we also got market services and manufacturing. This is an index that gathers, manufacturing sector as well as the services sector. So for February, anything above 50 on these are expansion. So we got a 56.5 on the services. From back in February, forecast was supposed to be a slight dip to 56. However, it went upwards to 58.9. So good news right there. Services industry picked up in March. And then manufacturing went from 57.3 in February. Forecast kind of 56.3. And it actually, instead of going down, again, like its counterpart, it went upwards to 58.5. So very good news overall. According to market services, we're seeing an impact, an uh, increase in both services and manufacturing right there as well. Um, Headline news, basically just two items. So we got some Fed speakers that were speaking today. Pretty much all agree. They talking about the rate hikes. We could see most likely see 7 rate hikes this year. However, a couple of these guys didn't really elaborate about talking about half a point. Most of them were talking about quarter points, and they want to get us to the level of like maybe all the way up to like 2.75 or 3%. There was one that cautioned that maybe going too fast might be could damage the economy. So that's something that that person was had some concerns over as well. So they might be more inclined to go a quarter percent, but we'll have to kind of wait and see. However, earlier in the week, a couple of days ago, Powell mentioned that he is open to a half a point increments, basically. He didn't say in those exact words, but basically said anything greater than a quarter point, which would be the next one up, a half a point on there. Now we do have the leaders from NATO were meeting in Brussels over the week, so and they implemented more sanctions on Russia to put more pressure on them to kind of to quit their invasion. However, again, we'll have to do a wait and see basically as it continues to go on. Stocks are up today, so money is coming back out of the mortgage-backed securities. As you can see here, we basically lost most of our gains from yesterday. We're getting a lot of head fakes here over this course here. So it's like we'll get somebody come in buying on the dip for a day, and the next day we'll kind of lose that gain. So this was kind of like what we saw yesterday. We gained a little bit, and today we lost it. We had a couple of price slight improvements because it was much lower. However, it's still lower. Our pricing is still not as good as what we closed off at yesterday. And you can see the volatility here. So we were kind of down slightly, went up, kind of went sideways for the most part, kind of went up, and we've kind of been kind of more sideways but slightly lower than where we were at the highs. So some volatility today, but again, mostly the volatility was kind of showing some improvement for us. However, it is still put us in a worse position than where we were yesterday. So instead of improving, we worsened a bit. Similar to yields, it went upwards. We're up to about 2.35 now, and continue to rise. So, for the most part, you're going to see rates continue to rise, and that's what we're seeing. So, lastly, we'll take a look at what's the average conforming loan the conforming rate for out there in the national level. 30 years at now at 4.68%, and the 15 years at 4%. So what does this mean? These do have points built into it, so that's why you don't see them in eighth or uh, showing in eighth increments as we would typically do when we quote rates. Again, they do have points built into them. So these are just kind of national averages. I wouldn't go upon as a uh, I wouldn't go out there and say that everybody's going to quote you this, because everybody's scenarios can be different than one another. There's a lot to go into quoting rates. So, anyways, if you guys would like a rate quote, please feel free to reach out. We can certainly accommodate that. We can certainly work with you guys uh, on different levels. But if you guys like, so again, reach out. We'd love to be able to communicate with you guys. Meanwhile, if you guys like these videos, please help us out and smash that like button. We greatly appreciate folks, and we'll look forward to see you guys tomorrow. Have a great rest of your day. Bye bye.